Hello and hope you're all doing well. Today I'm going to do my UK portfolio review and I'm going to take a look, or we're going to take a look at my UK portfolio and see how it's all doing. And I think this is really good for transparency. Every 3 months, I actually used to do it every month, but the views weren't doing that well, which I thought was absolutely crazy because you'd probably want to see how someone that's talking about stocks is actually performing. So yeah, I used to do it every month for many years. Some of you guys have been following the portfolio for since the UK portfolio was created, and I'll do the US portfolio in a few days time, but you could kind of track along and see how everything's doing. And I think this is really good for transparency, so you guys could see which stocks I own, which I don't own. I'm not selling anything out quietly in the background, and also I talk about what I'm buying, what I'm selling, and hopefully obviously this creates the transparency. I want to be a transparent content creator. I don't think there's many out there. I don't think there's probably more than I could count on one hand that actually do this sort of information. So hopefully you guys appreciate that, and we'll go through how the UK portfolio is doing. And if you want to see it every month instead of every 3 months, the place to be is on the Patreon. So join through that in the link in the description. So here we go. Overall, the UK portfolio, I'm quite happy with how it's going. In fact, I'm actually really happy how it's going. There's only really maybe 1.5 positions in here that I'm not so happy with. So in a whole portfolio, I mean, that's why you have a portfolio. It's to have diversification in case something goes wrong. And with the kind of 1 and 1.5 positions that I'm not as happy with, it's made up by all the other ones that seem to be doing really well at the moment anyway. So we'll start at the top and we'll make our way around, and I'll try to spend a minute or two on every company. But for a bear market, there's some pretty good performance going on in here. So start at the top, Airtel Africa. So I'm up 20% on this stock. I started buying this stock 3 years ago. I started buying this around the summertime of 2020, and since then the stock is actually in the 100% return club. For me though, I've prioritized, rather than showing off gains, I've prioritized actually building wealth and want to make more money. And I want to make more money because I think this stock is still very good value. So I've been averaging up on this position nearly every couple of months, especially recently. Recently this stock had a bit of a dip, and this is what happens. Sometimes stocks dip for no reason, and that happened with Airtel Africa. It was ticking along nicely in February, out of nowhere creates a 20% dip. I'll buy some more shares, and it was a stock that was actually really good performing in the whole stock market crash of 2022, where a lot of stocks started crashing. This stock was a very good performer, and then when we've actually seen a bit of a rally in a lot of the other stocks since the back end of 2022, this has actually then come one of my worst performing stocks. So it shows you. I was talking about this on Discord the other day, like sometimes you don't know when the next opportunity is going to be. You could have an opportunity in something that you're not expecting, and Airtel Africa is a bit like that. You weren't really expecting a stock that is 8 times earnings, 3.6% dividend yield, with crazy growth in the whole 4G area and the mobile money part of the platform. It comes out of nowhere, and this is it with Airtel Africa. I think this has been a very, very good opportunity this year to pick up some shares. So yeah, that is Airtel Africa. So that's been a very good performer. ASOS is doing okay. They are starting to show the signs of the turnaround happening, which is more than what I can say about Boohoo, which we'll get on into a few minutes. If they can get back to profitability, if they can get back to growth, which starts to looking like there's some areas starting to suggest that now after the whole CV situation, the whole shipping issues, the return issues that have been going on, I've got confidence that ASOS will actually do okay. So yeah, I could afford to buy some more, but I'm waiting for another trading update to make sure that the turnaround is still going on. But I mean, this stock has been beaten down massively at the moment, and it looks like it's down 47%. It looks like a lot, but if you actually look at the average that I'm actually holding, it's actually a pretty good average. And I think that if there was even a little bit slight more of a profitability and growth, you'd see that 47% recovered very fast, so I'm not worried about that one at all. Barclays up 4%. Obviously, this is quite a new position. I wouldn't mind buying some more Barclays, but it would need to drop a little bit more. That's a stock that will never give me like crazy amounts of growth, but it'll give me a solid dividend. It should give me some share price return. So that's just a bit of a rock in the portfolio that will give me some stability. I don't really have that many of them, like a Barclays, like a Legal in general. So yeah, I'm going to just make sure I have a little bit of a position there of Barclays. Barrett Developments up 7%. This has been doing quite well recently. Obviously, it's probably going to be another tough 6-12 months for Barrett Developments, but when the whole interest rates issue starts calming down, obviously we are so short in the UK market for, you know, new builds and houses, so this should do really well. So it could be a tough kind of 6-12 months still with Barratt Developments, but when we move out of the environment that we're in, I think Barratt Developments will do very well on the share price. Boohoo's one of the half stocks that I mentioned at the start that I'm not as happy with. Boohoo is a bit like ASOS, obviously CV boom, return rates going crazy, shipping rates very high. But whereas ASOS has started to show signs that it's starting to move back into a better direction, that hasn't happened with Boohoo. And I always said I've not bought Boohoo for a long time now, because I'm like, why should I buy? Like, there's nothing here to get me excited. Like, I'm looking at the company financially, there's not really any signs that there's some turnaround going on like ASOS. I'm looking at the trading updates. There's no upcoming events, and we're due an update. The last time we had an update was 19th of January. Normally, as you can see in 2022, we got one on the 4th of May. We got one here on the 5th of May. So we do this like any time, and we've not really had an update from Boohoo. And I'm like, they're not really providing me as a shareholder with any information, and they're not getting me excited as well. So yeah, it's a little bit like, you know, there's no point in me buying it at the moment. Now, obviously, I don't want to sell because I'm looking at the value it's at, and I'm thinking if there's any signs of like getting back to 3% profit margin, even if it was slower amounts of growth, I'd probably still get away with making money on this. But I need to see the signs really, and I haven't had them. So yeah. Best of the best down 37%. I've been nibbling away at best of the best. I think it's pretty good value. 12 times earnings, 1% dividend yield. That's a very low payout rate. They have an amazing balance sheet. They've kind of gone past the whole CV comp situation, and now the profit has stabilized. The revenue hopefully goes back up to ticking 3-4% a year. Expand the business model, maybe move that business model international. I am very happy to nibble away at best of the best, and I think that we could see that do very well going forward. So quietly nibbling in the background on that one. Catebox down 29% on this one. This one's been absolutely killed, where I think this is at very good levels now. 10 times earnings, nearly 6% dividend yield. They brought out a trading update. The trading update was really solid. So I mean, yeah, for the valuation it's at, for the growth you get in the dividend yield, I think Catebox is a solid pickup. I don't think it should be down at these levels much longer. That's just this bear market and this negative sentiment that's really pushed this one down. But I'm sure that if we were to come back to this video in a year's time, I wouldn't be shocked if I see this position up a fair amount. I think this is a gift at the moment that is going to obviously turn around very soon. Card Factory is up 136%. Same again, I started buying this one around the summer of 2020. Since that time frame, the stock has done very well. And you can see here, the stock since that time frame is up 191%. Same again, 100% member, but I've been averaging up on it because I think it's still a quality company at the valuation it's at, and the turnaround has been very good. Very good appointment with the new CEO that's come in. So yeah, very happy with Card Factory. Darktrace is a newish stock I've started buying. I think I started buying that one, I think in January this year. It's only been a couple of months, so yeah, obviously a little bit of a nibbled of a position there. If it can come a little bit lower, I'll pick up a few more shares, so I'll be keeping an eye on that one. Flutter up 41%. I would have liked to buy more Flutter, but obviously I've started buying it and it skyrocketed up. So if it's carried on skyrocketing up, I'll just sit back and hold that. Ideally, if it can go lower, I can buy some more shares. So yeah, we'll see what happens there. Forterra up 3%. Obviously, once again, a bit like Barratt Developments, need the housing market to rebound, which I don't think will happen for 6-12 months, and in that time frame there might be chances where I get Forterra a little bit lower, and if it goes lower, I'll buy a couple more shares. So that's the new position in Forterra, as you can see here. Jet2, which up 65%. This is once again a stock that I've held for quite a long time. Once again, I've been averaging up on this position a fair amount. I think from when I started buying it, obviously another 100% member up 148%, but I've been averaging up, I think, great. I wouldn't normally touch airlines, but this is a great airline to own. The service, the reviews is so ahead of everyone else. Holiday season still looks strong. I might nibble some more, so I might average up a little bit more on that one. We'll see what happens. Greggs, obviously a stock that I've owned for a long time as well. I sold off half my position once again for 100% return, which is absolutely crazy. I kept half my position just because it's a solid business. I'm going to pick up a lovely dividend. I can't see the business going anywhere anytime soon. So I've took a good amount of profit and the rest I'm just holding. So yeah, that's been a very good performer for me. Hollywood Bolt up 35%. I love this company. One of the best management teams out there. The Canada expansion, I'm really excited for. So yeah, I think it should be up probably a little bit more than what it is. If it drops a little bit more, I could be once again a buyer of that position. I would like Hollywood Bowl to be my biggest position, but it has to be the right price. Hotel Chocolat. Hotel Chocolat is the one stock in my portfolio that I'm not too happy with. So obviously, Boohoo, I said I'm a bit needs to be better. Hotel Chocolat is the one that I'm like, this is the one that's letting my portfolio down and letting me down. I'm not too happy with what's going on at Hotel Chocolat. The business, the management team, which I'm really surprised by because it's been such a well-managed business in the last few years. They've just in the last year they just don't seem to know what they're doing. They don't seem to know where they want the business to go. They want it to go into international, and then they seem to be focusing on margins, and then they seem to be wanting to go international again. They're focusing on margins and they're focusing on the UK, but then the UK sales are dropping off, and then it just doesn't seem to know. I mean, the recent one they put down to that they were short on inventory. Like, come on, like, you've been in this business for so long, surely you have a good idea like what the UK market's going to be on inventory wise, inventory over Easter sales. You know your demand. If you're focusing on just the UK market, surely that would have been really easy to add. I don't know. So I mean, I haven't sold it because they have a very good track record and I think they can sort this situation out, but it needs to turn around in the next 12 months. So yeah, we'll keep an eye on that one. JD Sports, maybe buy some more. I'll see what happens there. Legal in General, this had a major drop the other day. It went to ex-dividend day and the stock really did tank off when it, here, as you can see here, and then the stock went down like nearly 10%. So yeah, I think 6 times earnings, 8% dividend yield. This is just a bit like a Barclays. Won't give me crazy share price return, but a nice rock in the portfolio that pays a lovely dividend. I am nibbling on Legal in General when it does have a little bit of a drop. Money Supermarket, so I really like this company. I really like Money Supermarket. I like the insider buying. I like the moves they're making, the acquisitions. I like when the energy market comes back on. I like how they've, even with the energy market being shut down, the growth in the other areas has been really good. I think that comparison sites will just grow and grow going forward, especially if we're going to have more of a tight spending. People are going to be looking after that money more and more. I would really like to build up that position. The problem is I don't like it at this valuation. I told you before, I'm going to buy some, and if it goes up, okay, I've got some shares in it. I'll benefit from it. Ideally, I need it to go down. I need it to go down so I can buy some more and build up the position. So I'm in a waiting game with that one. That leads me on to Moonpig. Moonpig is exactly the same. I want to buy some shares. It needs to go lower. It's up. If it's up and it carries on going here, fair enough. I'm in here. I make money. Obviously not as much as I want, but if it goes lower, that'll be ideal. National Express down 13%. I think this is once again very much like a cake box. Like, it's just the negative sentiment of the market pushing this one down. I would not be surprised to see in a year's time we come back to this video when the stock's up 30-40%, dividends back, collecting a lovely dividend. I think that's a very nice opportunity there. Revolution Beauty, obviously their shares are being suspended recently at the moment. I say recently, it's been longer than recently. Obviously there's a lot of things that have been going on there. Looks like it's nearly all sorted. The share should come back online, and if they are posting okay financials or even good financials, you look at the likes of Elf or Ultra Beauty as well. If it has posted like decent financials, I think that should do very well when it comes back onto the market, because it was valued very, very low. It was valued before it was delisted as worst case scenario, and that's why I took a bit of it was one of my high risk stocks. Every so often I like having a bit of a spec position, and Revolution Beauty was that. And I think if the accounts are good and the growth has been good since it's been suspended, I think this could potentially have a little bit of a jump up. When it comes online, when it comes back on the market, I would look to probably sell it, just because one of the main reasons I bought was the founder and his experience and how much he was developing good products. And I'd, as long as this stock is up percentage wise, I probably will sell that and take the money and then reinvest it in somewhere else. And hopefully I want to see a quite a big jump when it does come onto the market. And that leaves with the last one, S4 Capital. S4 Capital is a funny one. It's been a very volatile stock. I mean, I remember, I started buying this stock in the start of, 2021. The stock went up a really good amount, and it was the best thing since sliced bread. The stock then went down. It was the worst thing ever to exist. And then the stock went up again. Once again, it's the best stock, and now it's come back down again, so it's the worst stock. And I've seen that, it is funny. Like, S4 Capital is funny because I've seen it's an example of where the share price goes, and people have been judging it on the share price. When it's up, it's the best stock ever. When it's down, it's the worst stock ever. It's a really one that follows the momentum there. I mean, it's pretty much sitting near 52 close at the moment, and even though the share price is zigzagging, for me, from when I bought the company hasn't changed. This is what happens. The company hasn't done this. Like, financially, the company hasn't been this. It's been ticking up nicely. And I mean, overall, I think like this is very good value for S4 Capital. There seems to be a big, we talked about it the other day, like it seems to be a big thing where the market managed to catch on that Rel has had treatment for cancer. Obviously, that wasn't public knowledge, and obviously the market sometimes gets a little bit more details than what we do as retail investors, and that's what's been sending the market down. And people worry that obviously if he's not there, then it won't be a successful company, and I think that's why it's priced so low. But even if he wasn't here, obviously that would change my thesis a little bit, where I wouldn't potentially have as much upside priced in. But I even think if there was a change in the management team here, like at £1.39, like the company's won 782 million. They're gonna, I think obviously they've just crossed the 1 billion mark in revenue. So he's trading at 0 point something times sales at the moment. And also you look at the gross margins. The gross margins are like somewhat towards 80% range. You stick a 5% profit margin on this company here, and you're talking about a company here that's going to be trading somewhere between like 15 times earnings. It's insane. Like a company that is a marketing company with the growth that they've had. You look at the environment that we're in, the marketing spend cut, look at the likes of Google, look at the likes of Meta, for example, and they're absolutely still outperforming the marketing industry. And you think, well, when the marketing industry comes back, which will probably be 12 months, let's say, the marketing industry comes back and it starts going to good amounts of growth, and this company has already been outperforming in the bear market, then when you get into a positive market, imagine what the company's going to do on a numbers point of view. It's crazy. So yeah, I'm just quietly nibbling away at S4 Capital every month or every 2 months, and I'll carry on doing it at these sort of levels. I think is a good opportunity. So yeah, that's S4 Capital anyway. Quick shout out. Obviously, you'll realise that Supreme isn't on here. This is a new stock that I added in. I've not had time to actually add that into the portfolio yet, but that's positioned somewhere like down 4% at the moment. So yeah, if that can go a little bit lower, I'll probably buy a few more shares in there. And you probably also know that Alpha Wave isn't in the portfolio, and most of you guys know I did the video on Friday, saying that I sold out of the position. I sold out for somewhere around a 15% gain, and yeah, that was obviously a very short hold, but the fundamentals kind of changed a little bit there, where they were the shares were getting suspended, and with the management team, that was my only factor of that I wasn't happy with how they had previously done with the company, and obviously with the suspension, I was like, I'm just going to take the profit off the table here and not hold that any longer, and just take away that risk. So obviously those are two things there that are worth shouting out, just so you guys know about that anyway. So anyway, hope you enjoyed the video. Let me know what you guys think, and thanks for watching, and I'll catch you in a bit.